Hello, Professor. This is my discussion presentation for week one. So first of all, I want to give you a brief summary about chapter one and chapter two. So in chapter one, it introduced some of the basic ideas in corporate finance. So there are some concerns about corporate finance. And in this book, it has three main areas. The first one is capital budgeting. It is about what long-term investment should the firm undertake. And the second one is capital structure. It is about where will a firm get their long-term financing to pay for its investment. And in other words, it's about what mixture of debit and equity should a firm use to fund operations. The final area is about working capital management, and it is about how should a firm manage its everyday financial activities. In this chapter, it also emphasized the goal of financial management for a profit business, and it is to make decisions that increase the value of the stock or more generally increase the market value of the equity. When we move on to chapter two, it introduced some of the basics of financial statements, such as uh, balance sheet, other financial statements, taxes, and cash flows. And this book values on an accounting balance sheet, which can be very different from market values. The goal of financial management is to maximize the market value of the stock. And also, it introduced the tax rate, which can be divided into marginal and average, and introduced its differences. And also, there's a cash flow identity, much like the balance sheet identity. It says that cash flow from assets equals cash flow to creditors and stockholders. So this is about chapter two. When it comes to trial balance, it is a bookkeeping worksheet in which the balances of all ledgers are compiled into debit and credit accounts. And it serves a report that lists the balance of all the individual T accounts of general ledger at a specific point in time. So there are two types of trial balance, an adjusted trial balance and an adjusted trial balance. So the purpose of a trial balance um, can be, there are two main reasons. The first one is the detection of any errors. The total of debit column will not match the total of credit column if there has been an error in recording or posting any journal entry up till this point. And another purpose of trial balance is for management usage. It is usually used internally and it's not for official distribution outside the company. The company can use this report to evaluate at a high level the finance position of a company. It will help address some questions like how much cash is available, the situation with debitors and creditors, and the total expenses paid. So for a balance sheet, it's very similar with the trial balance, but there have some differences. And the balance sheet aggregates multiple accounts, while the trial balance presents information at the account level. Also, the balance sheet is structured in accordance with specific accounting standards, while there's no mandated format for a trial balance. Besides, the balance sheet is intended for external use, while the trial balance is for use within the accounting department and by auditors. So the trial balance is for internal usage. The final difference is the balance sheet is a final report, while the trial balance is used to construct other reports. Here is an example for both balance sheet and trial balance sheet. So the above one is trial balance sheet. The trial balance ensures that the debits equals the credits, and it is important to note that the trial balances does not mean that the accounts are correct or that a mistake did not occur. So there might have be transactions missed or item entered in the wrong account. So for example, increasing the wrong asset account when a purchase is made or the wrong expense account when a payment is made. And there's another potential error is that a transaction was entered twice. So nevertheless, once the trial balance is prepared and the debits and the credits balance, the next step is to prepare the financial statements. So when you look at the below sheet, it is the balance sheet. So in the balance sheet, the left column can be divided into assets, liabilities, and equity. So if to check if the balance sheet is correct, the assets should be equals liabilities plus equity. So in this sheet, it is a correct balance sheet, and can be used for an external use for a company. So thank you for the presentation today.